Good afternoon, everyone, and welcome to the 90th annual meeting of Farmers Insurance Federal Credit Union. This is a very special year, our 90th anniversary. We've reached the grand old age of 90, or as I like to think of it, we're 90 years young. And we're making strides in a fast-changing world where finance moves as fast as you can tap an app. And artificial intelligence has revolutionized business and raised our expectations of what and how a financial institution should deliver. That's not unexpected. AI composes music and writes speeches in seconds. I assure you this one was written by a human because of all the spelling errors I saw earlier. Now, a quick order of business. Do I have a motion to waive the reading of last year's annual meeting minutes? Got a motion here from our former CEO? I'll second. All in favor? Aye. Aye. That is approved. Thank you very much, Mark. Next, I want to thank our management team, our supervisory committee, and the board for allowing me to serve as chairperson for another year. I want to applaud their phenomenal efforts and dedication over the past year. I'd also like to introduce our board members, many sitting to either side of me right now, and recognize their hard work, the time they volunteer, and their can-do attitude, and their good humor. Please stand or wave when I call your name. Mary Barnard, Bob Ratkovich, Mark Toohey, Derek Ferrandelli from our supervisory committee. We got Linda Sanazaro over here, Marilyn Huntemore, Lewis Williams, and this young lady here, Maria Resnick, who will be coming up in a little while. I also understand that this is being live streamed and telecast to all of our offices out there. So welcome everybody that's hard at work and in our offices across the country. Thank you for your exceptional work and dedication. Whether a startup or a well-established institution, the hallmark of an exceptional organization is not how well it performs when things are easy, but how it deals with challenge, learns from experience, and grows stronger. Last year was a great example of this. We began 2025 facing headwinds. The prior year had been unprofitable slightly, a slight net loss after many years of steady growth. We also wrote off a significant number of loans from members in financial distress, often due to circumstances beyond their control and beyond what we could have anticipated. As the year progressed, we turned things around. We returned to profitability, strengthened our financial position, and put in place long-term plans for sustained growth. We still have work to do. This is a journey. But today, we are profitable, stable, and well-positioned to deliver value to our members. And now, I'd like to hand it over to our Vice Chairman, Lewis Williams, who will give the Treasurer's report. Lewis, over to you.
Thank you, Rudy. And as Rudy said, last year, was a challenging year, but I'm pleased to announce that we have returned to profitability and robust financial stability. We turned a $9.6 million loss into a $2.5 million net profit. One of the key levers we used to achieve this was reducing our exposure to risk by shrinking our asset base. Writing off and selling off bad and high-risk debt was a significant part of that effort. Now, despite a smaller asset base, down from $1.44 billion the year before, we still ended the year with a healthy $1.33 billion in assets. From a national perspective, this ranks us at a very respectable 371 out of 4,372 credit unions, placing us in the top 8% by asset size. Another important measure of the value we provide our members is total loan and deposit balances per member. That number ended the year at 31,000, placing us in the top 20% of our peers. And our total loans per member came in close to 17,000, ranking us in the top 8%. Those balances reflect how our pricing remains competitive and how we strive to meet our members' needs. These financial results are reassuring, and they speak to our capacity to provide our member family with value and excellence. Now into the future. Now, another measure of how well we meet our members' needs is cost of funds. Think of this as how much we spend to attract deposits. Last year, it came in at 2.3%, which is about 35% higher than the peer average of 1.7%. What does this mean? It means we spend more money returning value to our members more than many other credit unions. So yes, that puts pressure on margins, but it also reflects our commitment to rewarding our members with highly competitive dividend rates. Now, let me turn from the value we provide directly to members to how well we financially manage the credit union on their behalf. Let's start with capitalization and safety. Capitalization is basically the difference between what we own and what we owe. The stronger that capitalization position, the greater our cushion against potential losses and the more secure our members' deposits. A key measure here is the net worth ratio. We grew this from just under 9% at the end of 2024 to 9.7% at the end of 2025. And we remain well capitalized under another important rubric, the complex credit union leverage ratio framework. These improvements helped us to lower our loan to share ratio from 111.7% down to 105.9%. This ratio reflects how much we lend compared to the deposits we hold. So why is this important? If lending gets us too high relative to deposits, our risk increases. Our ratio, I'm pleased to report, is well within the industry sweet spot. We also improved our interest rate risk profile, which is our ability to manage against adverse interest rate movements. These behind-the-scenes actions and wins demonstrate that our credit union, and especially our asset liability management committee, is managing risk with a steady and disciplined hand. In 2025, we also drove improvements in our efficiency ratio, a key measure of how effectively we operate our business. This is, simply put, how much we spend to generate $1 of revenue. The lower the number, the better. Last year, we improved from 77.2% to 75.7%. So finally, let's talk about return on assets. This measures how effectively we use everything we own to generate profits for our members. And here we saw an exceptional turnaround from a negative 0.6% in 2024 to a positive 0.2% in 2025. This is truly a noteworthy accomplishment and means we are generally stronger and more sustainable earnings for our members. Thank you. And next up, I'll hand the mic over to Derek Pirandelli, who leads our supervisory committee.
You can have my seat. Thank you, Louis, and thank you, employees and members of the credit union. As a reminder, the supervisory committee is the audit arm of the credit union. We hire the CPA firm that performs our annual financial audit, and we are pleased to report that the firm of Doran Mayhew, our external auditor, has finished another audit of our credit union. The auditor said financial statements present fairly the financial position of the credit union as of December 31st, 2025, in accordance with accounting principles that are accepted in the United States. The auditors point out that our financial and operational conditions are sound. For instance, our credit union's net worth ratio was 9.7% as of December 31st. In addition, We are responsible for investigating member complaints that are directed to our federal regulator, the National Credit Union Administration, or the NCUA. Over the past year, numerous letters have been received from members where they either raised a question about a process or a transaction or had a complaint. Each of these letters were investigated timely and satisfactorily. If you have any questions or comments for us, you may write us directly at the credit union. Address attention to the supervisory committee. To wrap up, I'd like to thank you again and pass it over to Mark Toohey to discuss the board nominations.
Thank you, Derek. And I just want to let you know, and Vahe and Mary know, how much all of us on the board appreciate the hard work you do as members of the Credit Union's Supervisory Committee. My name is Mark Toohey, and it is my honor to fill in during this portion of the annual meeting for Board Secretary Marilyn Huntemer. Marilyn has laryngitis, so I am filling in for Marilyn, or will try to, Marilyn. This year, we have 4 incumbent board members up for nomination. The 4 are Marilyn, Lewis Hudson, who you just heard from, Mike Ash, who you haven't heard from, and Mike is unable to join us in person, but is here with us virtually. So Mike is one of the 4, and myself. Let's get started with the gentleman who's not here with us today, and that's Mike Ash. Mike has served on the credit union board since 2002, a Las Vegas resident since 1965. Mike operated a very, very successful insurance agency for farmers until his retirement in 2018. And if you do the math, which I'm not super duper good at, in my head at least, 45 years Mike Ash served as a farmer's agent. During that distinguished career, he made, and this will mean something to the district managers and agents for farmers, he made 38 topper clubs, which is one of the achievement clubs for agents and district managers, 26 president's councils. He was the Farmers Agent of the Year, and that's a national award, Farmers Agent of the Year, and he was also inducted into the President's Council Hall of Fame. Mike also served on the Farmers Agency Advisory Committee, and he volunteers with the Boy Scouts of America. Mike has a bachelor's degree in business from the University of Nevada. Next up is Marilyn. Marilyn has 3 decades, that's 30 years, of agency leadership at Farmers Insurance, and she assumed her father's agency, Farmers Agency, in 1982. Her recognitions include 25 years of topper clubs, 4 President's Council selections, and 6 life championships. You know, it's Marilyn's perspective that helps the credit union board and the credit union shape our strategies that supports agents in achieving long-term business and financial success. Let's now talk a little bit about Lewis Hudson. Lewis currently serves as the head of IT finance for farmers, a role that he has held since 2007. Prior to that, Lewis served in various finance leadership roles within Farmers Corporate Finance. He has a bachelor's degree and a master's degree in business administration with an emphasis on accounting. Before being appointed to the board, Lewis served as chair of the credit union's supervisory committee, and in his spare time, he enjoys biking, basketball, golf, and reading. Now I have the task of probably the most difficult task that I've had in a long time, and that is to talk a little bit about myself. I have served on the credit union board since 2019, and I very proudly chaired the board's 2024 CEO search committee, which identified and enlisted our new CEO, who you will hear from in a few minutes, Maria Resnick. I have a communications and public affairs background of more than 25 years in media and government relations leadership at Farmers, where I served and retired as a senior vice president. My career started as a journalist, and I was a press secretary for 2 Texas elected officials prior to joining Farmers. Since my retirement, I have done consulting work for the California Earthquake Authority and most recently for the Personal Insurance Federation of California's Political Action Committee. I have a bachelor's degree in journalism from the State University College of New York at Buffalo. Most importantly, I joined the credit union on my first day at Farmers, May 18th, 1992, at the Austin, Texas, North Texas Regional Office branch. I later found out that my boss told me this, he later told me that my employment and my success was contingent on becoming a credit union member on my first day of work. With that, let me finish this up by letting you know that those are the 4 nominations. Our bylaws for the credit union allow nominations through a member petition process. And having received none, I hereby declare that our 4 nominees, Mike Ash, Marilyn Huntemer, Lewis Williams, and myself, Mark Toohey, will serve for the next term. With that, I turn it over to you, Rudy.
Thank you. Thank you, Mark. I neglected to mention another member of our board here, and that's Mr. Carl Hackling, who came in just a little bit later. So Carl, welcome. And congratulations, board members. You are on the payroll. And that's an unpaid payroll too for another year. Glad to have you all. I now have the pleasure of introducing our esteemed CEO, Maria. Maria has been leading this organization for about a year now, but given her effort and the transformation that she driven and continues to drive, it might feel a lot longer to her. We'll share a few words. She'll share a few words and then take your questions, which you can send in during the meeting via the video chat feature. So please have your questions ready. Maria loves questions, especially the harder, the better. So please join me in welcoming Maria Resnick.
Unlike the other speakers, I am quite petite, so I need to kind of grab the mic and just get away from the podium. Otherwise, you won't see me. So I want to say thank you very much to everybody, especially the board. That is true. They don't get paid. So they have to sacrifice a lot of personal time. So I want to, before I begin, I'd like to thank the board of directors and especially our board chair, Rudy Trevino, for their leadership, their stewardship, and the trust they have placed in me to help lead the Farmers Insurance Federal Credit Union organization into its next chapter. So I'm very grateful for their support and for their continued commitment to our members. Today is a very special occasion as we gather for our annual meeting. We celebrate the opening of our new branch in Burbank. We recognize 90 years of proudly serving our members. For 9 decades, this credit union has been built on the simple but powerful idea that people help people. That principle continues to guide us today. We believe financial services should do more than just process transactions or deposits. They should create opportunity, remove barriers, and help people and businesses move forward. We work to understand our members' goals, listen deeply to their needs, and go the extra mile to help find solutions to help them succeed. Whether someone is buying a home or building credit, starting a business, or taking the next step in life, we want to be the partner that believes in them, that helps make it possible. This is why members choose us and why so many continue to stay with us. We place members at the center of every decision, and we continue to innovate boldly so we can serve them better today and tomorrow. I'd like to review 2025. You've heard some of the numbers already, but we remain focused on strengthening the financial foundation of this credit union and positioning ourselves for longer-term success. Yes, we had a $9.6 million net income loss in 2024, and our ROA was a negative 60 basis points. Surprise! That was a little bit of a, hey, whoops, we have work to do. But by the end of 2025, we returned to profitability with net income of positive $2.5 million, and we improved our return on assets to 20 basis points positive. That represents meaningful turnaround, not just a little luck, but it took disciplined steps to reduce operating expenses. We improved efficiency. We reduced interest rate risk. We strengthened the balance sheet. But 2025 was not just about improving metrics, but also about how we serve members, innovating and moving with urgency. When an important lending program changed last year, we responded quickly. Within weeks, we returned to the farmers market, not farmers market, but farmers market, with a stronger underwriting discipline, a sharper focus on sustainable portfolio performance. And we also introduced a new innovative program that was to help our entrepreneurs, our proteges, who are farmers insurance agency owners beginning their career. And we help them get access to traditional financing, which normally they might not have ever had the chance. So this is what our mission looks like in action. That's how we're creating opportunity, and that's how we're helping our members. At the same time, we strengthen our loss mitigation and recovery efforts. We work directly with members facing challenges. We help them find workable solutions. We reduced avoidable losses, and we protected the strength of the credit union by doing so. These results didn't happen by chance. They were made possible through focused execution, responsible leadership, and the extraordinary dedication of our employees. So I'd like to take a quick pause here and just to give them a round of applause for our employees who really dedicated many hours for those results that we had in 2025. Thank you. So while we are proud of the progress we made, we're even more energized about what lies ahead. So let me tell you a little bit about 2026 and what we have going on. Later this year, we will be launching a new digital banking platform. For all of those who said, oh, we've been through the Tuli launch back in 2022, I'm sorry, we're doing it again. But I promise you what you're getting is a really state-of-the-art system. We're going to deliver a more modern, seamless, and convenient experience for our members. When I was out doing my listening tour, I heard members tell me firsthand, I want Zelle back. I want this. I want that. I have a business. Why do I have to have a separate login for my business or my member, my personal account? So now these meaningful improvements that we're bringing you will be something that you will feel in your daily lives. You'll see the return of Zelle, as I mentioned. You'll see faster person-to-person payments because of that. You'll have stronger mobile and online capabilities. No more asking for a wire through a paper process that'll be integrated. We will also be able to do direct integrations with all the different applications that you're using today. So these tools will help members monitor and improve their credit profiles and improve that over time. So for our members who own businesses, some good news here too. We'll make it easier for you to manage both the business and the personal accounts by giving you the ability with the same user ID to log back and forth between the two accounts. You'll also be able to provide secure view-only access to trusted advisors such as accountants. You'll also be able to connect important tools that you use in your business every day, like QuickBooks, for example. All of those enhancements and improvements are coming at the end of this year, Q4. Look out for that. We're also building capabilities that will give business owners better visibility into your cash flow, your lending relationships, and financial tools that you need to grow with confidence. We also recognize that many of our members are entrepreneurs, agency owners, small business leaders. Supporting businesses is already part of who we are. Now that we're preparing to bring even stronger tools, products, and services to help you grow and succeed, we're also going to be expanding that to other business members across our communities where we serve. We remain deeply committed to farmers insurance and the community. We continue to broaden our reach and welcome new members across our markets. So our long-term vision is simple: to build a stronger, more capable credit union that can serve members in more ways, in better places, in greater convenience and greater value. So growth is not just about size for the sake of size. We are also on a growth path. And we are ambitious about that growth because that growth gives us the ability to invest in better technology, broader products, stronger service, expanded access, and talent needed to meet the changing needs of our membership. So as we grow, we create more scale, more resilience, and more opportunity to return value back to people who own this institution, our members. That's you. We will pursue that future guided by the values that define us, working together, owning our responsibilities, innovating boldly, and always putting members at the center of every decision. The future of Farmers Insurance Federal Credit Union is bright. We are building an institution that is stronger financially, smarter strategically, bolder in innovation, and deeply committed to the people we serve. Today, we honor 90 years of history, but make no mistake, we are just getting started. Thank you all for your trust, for your membership, and for helping us build the next chapter of this credit union. And this will be one of our strongest yet. And we'll build it together. So thank you very much. And for those who've joined us from Zoom, from our branches, thank you very much for being here. At this point, I would like to see if there are any questions. I know that we have a few people that have submitted some questions. There were some questions around some card processing times. We will get you back some answers. There are some enhancements coming at the end of this year around our card program. We will be launching business cards, which will give, again, business owners the proper card to use to do their business. We're also going to be enhancing and improving some of the feature functionalities to give you greater visibility on transactions real time, not having to wait until those transactions clear, which could take a few days. So that was one set of questions that we received. We also had a question about whether we will be expanding branches. Are we going to Houston? Are we going? I would love to say, yes, let's go everywhere. But let's be honest, we don't have a couple of $1 trillion in our pockets where we can just say, let's go build a branch in every location. So we have to be strategic. We have to be thoughtful. We have to look at where our members are using us today. We have 8 branches with our Burbank branch included today. We have 8 branches. And what we want to make sure is we've got them in the right locations that are convenient for our membership. And as we grow, we need to place those branches in those locations that maximize the return on investment. So yes, there's a commitment to growing and improving our footprint, but that is going to be predicated on the scale and the growth that we're achieving. So as we grow, yes, you'll see more of us in more places. I can't say specifically about Houston, though I do hear summertime is a bit hot there, but we will see what we can do in growing our footprint, definitely in areas where we have large concentrations of our members, which I believe also Texas is one of those markets. Any other questions that we have in the audience while I wait for a couple of more prompts? Yes.
We have Michael Stump online. He's asking, what were the general sources of the non-performing loans?
Michael, your name is not on the list. Thank you so much for your question. I will say that we felt that the majority of those loan losses we were feeling were for unsecured portfolio. So unsecured from signature loans that we make, credit cards. We saw default rates go up. We also saw in the Farmers Agency unsecured portfolio, we saw losses there as well. Primarily in 2024, the biggest losses came from that segment because there were some changes that happened on the farmers insurance side regarding commissions. And some of those commission changes impacted the income sources of many of those people who took on those loans. And so what we have found since then, as we said, we need to have a tighter relationship with farmers leadership. We need to understand when things are going to happen, when are they happening, what's going to happen. Let's prepare, and then let's start to work more closely with our members. And if we know something's about to happen, let's get preemptive rather than waiting for somebody to go into bankruptcy or waiting for somebody to miss a payment on a loan. So that is how we've approached those losses. We've also stopped underwriting in areas, we've slowed down writing loans in areas where we were taking big losses. Instead, we shifted our focus to underwriting more loans in what we call collateralized loans. So where there's a vehicle behind it, like an auto loan, or where there is a home behind it, like with a first mortgage or a HELOC or a fixed second. So that's the way we've addressed those losses. We know whatever's happened in the past, what's been lost is lost. We need to weather through some of that. And we have. And we will continue to over coming years, but working with our membership proactively, trying to help them mitigate those losses, restructure those loans as needed, providing the flexibility for our membership to adapt to changing situations economically. That's where we have spent a lot of time. Thank you for that question, Mike.
I have one more here from Aubrey Maxey. Will you be adding rewards to credit cards?
Ah, great question. Yes, we do. We have a new reward program that's going to be launching end of September. Again, business credit cards as well as consumer credit cards. We are rethinking a lot of that and trying to bring more value. So yes, the short answer to your question is yes. The timing is towards the end of this year, but we do have some cards today, consumer cards that get cash back. And so, yeah, we do have those today. They are wonderful programs. If you're not aware of those, I would highly suggest walk into one of our branches, call our call center. We can run you through any of those card options that do return reward. Okay. Any other questions from anyone in the audience? Yes.
I've been an agent for 33 years, and we've been going to Woodland Hills, and all my husband and I, we're actually together in our agency. He merged with me, and now we have one. And I'm so happy to work with John Stevenson. It's been wonderful. And just wanted to let you know that we're welcome to Burbank. It's where my town, where I was born and raised. And so happy to see that you're all here, and very excited to bring all my clients on board. Thank
Well,
you.
Thank you so much. And what your name was?
Brenda Kewen.
Brenda, thank you so much, Brenda. And thank you for the warm welcome here in Burbank. We're excited to be able to offer more services here in the community. But we know farmers is such an important part of our history. It's an important part of our membership. 60% of our membership today is attributable in one shape or form to Farmers Insurance. So we definitely we value that partnership that we have with you, and thank you very much for your trust.
We're bringing everything back. We were with you in the beginning, and then we had the situation where business was being part of our credit report. So that we went to Northwest Preferred, transferred everything there, and now we're on the process of bringing everything back here because we've always wanted to be. We felt like this is home, and so we're happy that now
Thank
we don't
you.
have to worry about it being. Thank you.
Thank you so much, Brenda. Northwest Preferred, great credit union as well. Never say anything, but they're amazing. We
We're excited.
need to make sure though the service we provide you and how we treat you lives up to what we know it should be and what it has been over the last 90 years. So a large part of where our focus is in this year as well is bringing back member experience and really thinking about how do we improve call wait times. We don't like it when our members have to wait on the phone waiting to speak to us. We don't like to get those customer complaints or member complaints from the NCUA. We know we get them, but we use them as an opportunity to say, how are we going to get better? And so I'm very proud of that. I'm very proud of what the team has done in collecting those issues and then actioning them. So thank you so much, Brenda.
Thank
and
you.
welcome.
Thank you, and welcome.
Thank you. Okay. If there are no other, we have another question. Thank you. Sorry, do you mind repeating your question?
I'll repeat
please?
that. During COVID, it seems like the Credit Union Service Center program suffered. Is it still viable?
When you're referring to, and sorry, first of all, your name, sir?
Ted.
Ted. Thank you, Ted. Ted, my question would be, how did you feel that the service center suffered? Are you referring to the call center in particular?
Well, I live in Las Vegas,
Uh-huh.
and we have one service center remaining after some probably 8 or 10 of them closed. And it's 35 miles, and I'm not going there. And this is the sense, what do you do with cash?
Yeah.
Okay. So ATMs, they're around.
Yeah.
Many of them charge fees in Vegas. Service centers used to be very handy.
Yeah, thank you for that question, Ted. That's a really important question because we have members across all 50 states. And for us to think that we're servicing everybody to the level that they deserve to be serviced. We're not Chase, right? We're not on every corner. But we want to make sure we give you the services you need. There are three things we've relied on in the past to give you access. One is our own branches. Maybe that might be the concept of the service center. The second thing we've depended on is the credit union ecosystem, which we call shared branching. And shared branching would mean I am a member of FIGFCU. I can go into a Logix branch and I can take out money from their ATM and I can go there and do certain transactions and they'll treat you like we would treat you. And they invite you to their home, and there was this shared branching concept that was very strong in the credit union community. And then the third thing is that we try to do that digitally and get you the services you need through our contact center and all that. So we are definitely looking to focus our growth in branches in areas where we need to be. So yes, over time, you'll see us grow, as I mentioned before. The shared branching is an interesting one because there are service centers that used to collect deposits or pay out cash. That is not as much under our control. So our peers in the credit union industry decide to participate in that shared branching or not. And we've seen over the years, some credit unions have said, you know what, I'm backing out of shared branching. Others have said, I'll accept your members. But that one's a little trickier. So what I do is I advocate at the industry level to improve the access to shared branching because I know how important that is to our members. And I know that we can't be in 50 states. So I continue to push on that angle where I can get influence in our industry. And then the third thing being digital and the call center, even our sales team. We have about 7-8 salespeople who run the country. They run around, and wherever we don't have branches, they're out there visiting in Washington, visiting in all the different states where we are. And I don't want to call them mobile bankers because that would make them sound kind of funny, but maybe we should get you like mobile banking in human form, mobile banking. But we do want to reach you and help you do what you need to do. I can't promise you, Ted, that we're going to have an ATM in your location. The fourth thing I would say that we also do, and I should have remembered this, we have an ATM network that you have access to. And we're expanding that too. So we have partnerships with organizations called Allpoint and a few others. And what we are trying to do is increase the footprint. So as you're out there at a Walmart and you see an Allpoint, you can go ahead and withdraw money or deposit money. Well, typically withdrawing money, I think, is where we allow those transactions. Remote deposit capture, if you're not using it today and you have checks that you want to deposit, we are allowing for businesses higher limits. So if you have a $20,000 check and you don't have a branch nearby, we're trying to enable it so that you can deposit it via the mobile application. So we are doing things to try to improve it. But unless somebody has maybe $1 billion or so that you have knocking around and you want to invest it, I don't know how else we solve getting you more branches, but I would love that as we grow. Yeah.
Okay, thank you.
Thank you. Okay, so any other questions before we wrap? I again want to thank everybody, and I want to also thank the entire team that went behind putting together this production today. A huge round of applause, please. Our employees have been amazing, amazing. And thank you. Thank you to all of you who've joined, and we look forward to next year's annual meeting. And please provide us some feedback and let us know what else we can do to help you next year. Have a good day.